Welcome to Middle Class Matters, Business News in English from Dr. C.M.A. ALAGESAN. Adani's response dated January 29, 2023 for the Hindenburg Research Report on Adani stock manipulation and accounting fraud. The Adani's response is read in full, part number 8. Source page 14 of the financial statement of AMPL for financial year 15 showing the part transfer of exploration and evaluation of assets. In continuation of that, source page 13 of financial statement of AMPL for financial year 15 showing the reversal of cost which was expensed in profit and loss account in earlier years and other income on account of management fee. Adani Mining Pty Limited notes to the financial statements year ended 31st March 2015. Financial year 31st March 2015 and financial year 31st March 2014 in dollars. Other income. Recovery of cost from Charmichal Rail Network Trust 5,737,915. Management fee from Cormichal Rail Network Trust 9,160,854. Other income 355,564. 312,759. Total 15,254,333 for 2015 and for 2014 312,759. Treatment of these amounts in the acquiring entity. The transaction represented transfer of project-specific amounts from CPWIP and profit and loss account, and to keep the treatment of the amount consistent with how it was originally treated in the financials of AMPL. The amount of 92,928,540 Australian dollars, which represented the transfer of exploration and evaluation assets, was recorded as CPWIP, and the balance amount taken to the profit and loss account through an expense of Australian dollars 23,255,069 as general and administration expenses. The amount of Australian dollars 23,255,069 represented as day one write-off of CWIP were already part of the expenses of AMPL in the previous years and current year in which the transfer occurred, and hence it was not an immediate write-off of acquired assets but an accounting transfer of an amount from capital work in progress to profit and loss account as required and consistent with accounting principles. Source page 13 of financial statement of Cormichal Rail Network Trust for financial year 2015. Cormichal Rail Network Trust notes to the financial statements period ended 31st March 2015. Dollars to other income, interest income 49,970. 3. General and administrative expenses, reimbursement of expenses to Adani Mining Pty Limited 23,255,069. Audit fees 5,000. Others 7,500. Total 23,267,569. 21. Allegation number 40. A Vinod Adani controlled Mauritius entity now called Karnal Trade and Investment lent INR 11.71 billion $253 million to a private Adani entity without disclosure of it being a related party loan. How does Adani explain this? 22. Allegation number 42. A Vinod Adani controlled Cyprus entity called Wadogar Investments has no signs of employees, no substantiative online presence and no clear operations. It had an investment of $85 million in an Adani private entity without disclosure that it was a related party. How does Adani explain this? 23. Allegation number 43. What was the source of the Wadogar funds? 24. Allegation number 46. We found that a silver bar merchant based at a residence with no website and no obvious signs of operations run by a current and former Adani director, lent INR 15 billion US dollar 202 million to private Adani Infra with no disclosure of it being a related party transaction. What is the explanation for the lack of required disclosure? 25. Allegation number 48. Grandinia Trade and Investments is a Mauritius-based entity with no website, no employees on LinkedIn, no social media presence and no apparent web presence. One of its directors is Subir Mitra, the head of the Adani Private Family Office. The entity lent INR 51.4 billion US dollars 692.5 million to private Adani Infra with no disclosure of it being a related party loan. What is the explanation for the lack of required disclosure? 26. Allegation number 47. What was the purpose of the loan and what was the original source of the silver bar merchants funds? 27. Allegation number 49. What was the purpose of the loan and what was the original source of the Grandia Trade and Investments funds? 28. Allegation number 50. Milestone Trade Links, another claimed silver and gold merchant, also run by a long-standing employee of the Adani Group and a former director of Adani Companies, invested INR 7.5 billion US dollar 101 million into Adani Infra. Once again, there was no disclosure of it being a related party loan. What is the explanation for the lack of required disclosure? 29. Allegation number 51. What was the purpose of the loan and what was the original source of the Milestone Trade Links funds? Common response. The above cited transactions with Karnal Trade and Investments, Vadodara, Ranvahar Infrastructure, Milestone Trade Link, Gardenia Trade and Investment and the private Adani entities are not related party transactions under laws of Indian or accounting standards. Consequently, we are neither aware nor required to be aware of their source of funds. All transactions cited above between the Adani listed entities and the Adani private Adani entities, that is Adani Estates Private Limited, Sun Brown Developers Private Limited, or related party transactions which have been undertaken on arm's length terms and in compliance with applicable Indian laws and standards, and have also been fully disclosed as related party transactions. 30. Allegation number 41. A Vinod Adani controlled UAE entity called Emerging Market Investment DMCC lists no employees on LinkedIn and has no substantive online presence and has announced no clients or deals and is based out of an apartment in the UAE. It lent $1 billion to an Adani Power subsidiary. What was the source of the Emerging Market Investment DMCC funds? This allegation is clearly incorrect and is due to lack of understanding of the Indian debt restructuring regulations. As part of the debt resolution plan of Mahan Energen Limited, earlier named as SR Mahan Limited, duly approved by the NCLT under the Indian Bankruptcy Code, Emerging Market Investment DMCC, an affiliate of Adani Power Limited, the successful bidder for this asset, acquired the unsustainable debt from the erstwhile lenders of Mahan Energen Limited for a consideration of $100. Emerging Market Investment DMCC has not lent $1 billion to Mahan Energen, but has acquired this debt by paying $100 as part of the NCLT approved resolution plan. The order of the National Company Law Tribunal is annexed as Annexure 7. In any event, there is no restriction on Adani listed entities or their subsidiaries to avail loans from promoter entities from time to time for their business purposes. All such loans are availed in compliance with relevant laws and are suitably disclosed as required under the laws and accounting standard. 31. Allegation number 58. In financial year 20, Adi Corp Enterprises only generated INR 6.9 million $97,000 in net profit. That same year, 4 Adani Group company entities lent it $87.4 million, or more than 900 years of Adi Corp net income. These loans seem to make little financial sense. What was the underwriting process and business rationale that went into making these loans? 32. Allegation number 59. Adi Corp almost immediately relent 98% of those loans to listed Adani Power. Was Adi Corp simply used as a conduit to serpently move funds into Adani Power from other Adani Group entities and sidestep related party norms? Common response. Adi Corp is not a related party, and transactions with Adi Corp are not related party transactions under laws of Indian or accounting standards, and these have been undertaken in compliance with applicable law. Please like the video, subscribe to the channel. Please share as much as possible for educating your friends. Thanks for watching.